I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, we are live. Love Wednesdays. So here we are. Just wanted to give you a quick reminder that you should definitely check us out over on cryptoinfluencers.com. The free channel is here, and the pro channel, we're getting a few new pros. So we're going to be helping you guys, teaching you guys how to manage risk and make the most of the market conditions. So that is the goal. But it's cool. It's fun to have new people coming in and joining. No other announcements, so let's just jump right in. Okay, so last Wednesday we were looking at the weekly chart, and we had a falling wedge here that we are working on. This line has been in play since November of 2021, so this is almost a year and a half old, and we're trying to work our way through it. There is resistance here. We currently have four days, 5 hours left on the on this chart here. We're creating a doji, which is reversal, but the doji is above our candle. Obviously, this line is not perfectly precise. I try to draw these lines as good as I can, as if it was a line chart. So you can see the line chart, how it just barely nicks the tips of these. And this was the very tip top, and we're here. In 4 days, do we pull back below this line? If we did, that would be 22,200 or something. Or do we cross it? Because this could potentially be there. Other chartists, they will kind of navigate these to the worst case scenario, like, you know, they'll go as tight as they can up here, and the line could still be intact by the wick up here. So they could put it, you know, kind of anywhere in here. Most will try to be consistent though. So if you went to the candle body here and the candle body here, we're kind of on the line. So there's a little bit of kind of variance that is possible, but this is where I like to draw my lines, I think. But yeah, this is definitely a reversal. Yeah. So anyway, so this is kind of where we're looking at the current situation on the weekly. The daily, I am looking for a pullback of some kind. As I've said, most recently, I don't know how much of a pullback we'll get. There's a lot of excitement in this market, and this is all one move. This was our first attempt at a pullback, but we really didn't get a pullback. This was more of a temporary pause. And this is our next attempt at a pullback. Last night, I kind of did a video pointing out that we were starting to show some weakness. We're kind of in an indecision point. Do you see how many wicks we have on both sides of this? So we have wicks on both sides pretty long, and so there's kind of a lot of indecision here, and we still have yet to see which side wins out. The reason I feel like we need a pullback of some kind is that we have this bearish divergence that would be resolved if we pulled back a little bit, and then we'd have a fresh move that we could, you know, sustain continued upside. The other thing that I'm noticing is that if you go to smaller time frames, the 4 hour is kind of telling us a story. We had a big candle to drop through the 20, and this is where I kind of made that warning video last night. just saying that this is generally a pretty critical level. We attempted it here, and we went down for a little while and then popped back up. This one is a little bit more lazy, but we're still below the 4-hour, the 20 I mean. So 22,800 is sort of the top of this. If we break above this, we may be in for another run. The problem is that our run, the dramatic move from here to here, was about a $4,000 move. The move from here to here was about a $2,000 move, so we are losing momentum. And that is visible with our bearish divergence that we're seeing. So I think we just need a consolidation. This isn't a doom and gloom thing. This is a how do we make a healthy chart? And that leads me, well, I'll just point one more thing out on the 1 hour. On the 1 hour, the Kelvin moving averages that I've created, this indicator, leaving the green zone is usually the place to expect some downside. So when we left the yellow zone or the green zone here, we had a pretty good pullback, and we saw that on the 4 hour. This was one more quick attempt, like we had pulled up and pulled down. This bottom actually represents our lowest low after this move to the upside. So these lows were not lower than that. So I'm actually curious to see how we'll behave if we ever do break this. This actually could be kind of a breakdown. But as you can see, we've gone from green to yellow most recently, and we're still in yellow. So we haven't recouped. It took us a little while to get to green here, but we've been in yellow much longer. So it's given us enough time for our 50 to cross below our 100 on the 1 hour chart. So there could be a little bit of downside here. That's kind of what I'm looking for. So the title of this video is how do you prepare for the bull market? So I know I've been putting out a lot of things to say Bitcoin's having a pullback, or we're looking for one, I'm waiting for an anticipation. All of this is in preparation for a bull market. We have totally shifted gears. With a new high on the daily from our prior high, our market is completely moving into either sideways consolidation or a bull market, one of the two. And our downside is going to be limited because it would be a lot of work for us to break a resistance point like this and then lose our support down here. It would just be really weird. And certainly Bitcoin's never done this before. So the question is what do we do? The pro channel is kind of they're getting a little bit more of an insight as far as my thoughts here. But in a bull market, we want to be adding to our position. We want to be buying dips. In a bear market, we don't buy dips. We're a dip if we buy the dip. So in a bear market, you're just getting, it dips and dips and dips. And in sideways consolidations, if you've got the guts and if you've got good risk management, you can buy dips. But it's bull markets where you want to buy dips. It's any little pullback. So when we're well above, we finally hit a green zone for the first time. So here's a green zone. But yeah, you're looking for any little excuse to buy Bitcoin. When you find these tiny little dips and you're like, yep, sign me up. Sign me up for all these dips because you're in this bull market. When the market rolls over and you've exited the green zone, now we're starting to be cautious. We're trying to be more careful, and we're not necessarily buying dips. And then exiting red zone here and here, these are great places to enter. But yeah, once we start getting towards green zones, every one of these dips are delicious. That's what we're after. So the best way to prepare is to make sure that you're not overextended because markets can be very volatile still. And if you're unfamiliar with how to use leverage, my philosophy on that is that you only use leverage to limit your exposure to exchange risk. So if you have a let's say you've got $100,000 in crypto offline, and you want to put $100,000 into Bitcoin. Well, you can go as much leverage as you want as long as your total exposure is $100,000 or less, because you can buy on leverage, and if the position goes wrong, then you pull back. You can pull in capital and cover your position. And when things are going right, you don't have money sitting on an exchange just being exposed to issues with the exchange, whether there's a hack or a problem like that. So it's a way of diversifying and actually minimizing risk. And in fact, you are using margin and leverage. So it's kind of an interesting concept, but that's how I trade when I'm teaching the pro channel and others. So Cohen, thank you for joining. I'm glad someone showed up here to let me know that this is working. Chris Wall says, I believe we are going down some. Can anyone see Twizzler tops on the daily chart? I guess I'm not entirely sure what a Twizzler top is. But if you're talking about these kind of longer candles than the longer wicks on the top, then yeah, this is definitely downward pressure. When you kind of zoom in on it though, on the 4-hour, we're kind of getting both, because every attempt at a pullback like this was our most significant one. It pulled way back up. It bought it all the way up and became a very bullish candle. So our low point became a bullish candle. This was our next attempt, and it ended up being a very long, thin candle. The only two candles of a decent candle body was this one, which happened right after the climax, and this one, which was our exit from our rising wedge. So these were two dramatic moves. This one also got us below the 20. So these are the only real moves that we've seen as far as bearish performance, and we are just about to test the 20. How we interact with the 20 on the 4-hour is probably going to dictate a lot, because if we get rejected from the 20 and we turn out around and start working on our 50, this could be a big turnaround moment. And if we get a good sell-off, believe me, this is when I'm tweezer top, sorry. Yeah, so anyway, we're looking for long entries. I'm just not in the camp that we're going to see below 10,000. I really haven't been there this entire time. One other thing that kind of supports my thesis is that markets have been following. We've never really had a U.S. recession or bear market in the history of Bitcoin. It was created because of irresponsible banking and bailouts and things like that. Like, that's when Bitcoin showed up at the first. But we've kind of gone straight up for 10 years, and Bitcoin's never really been tested in a bear market. Just so happens that the bear market that we finally saw in the U.S. stock market matched our Bitcoin bear market. It was year 4. So it's hard to know what would it look like if the U.S. was in a bear market and Bitcoin was in the bull year. You know what I mean? So we haven't seen that. But a lot of people they're kind of in the camp that if the S&P does well, then Bitcoin will do well and all of that. And honestly, the S&P, I'm very bullish on the S&P. We haven't talked about that for a little while, but I kind of drew this line here quite a while ago. It would have been, April or August of 2022. And we've pulled back. We established a low, and then we pulled all the way back up to our line. And this move here is the selling point. On larger time frames, as long as you can keep it about above the 50% mark, you've created a potential for a turnaround. And so we dropped down, pulled up, and we only pulled up halfway. So here we have a high, and then we have a low, and then we have a lower high, and a lower low, and a lower high. Well, this one is the question mark, because this isn't a lower low. This is a higher low, which means a shift could be in the air. And the more often and more frequent you run up against a resistance line, the more likely chance you have of breaking it. If we break across this, it's going to be extremely bullish. And I don't care what the news says. I care what the charts say. And the chart is screaming that a breakout is imminent. I mean, look at this. We've had 3 days where we've closed our candle. No matter where we've opened in all over the map. And for 3 days now, we've butted up against this line almost to perfection. I think it's unbelievable. And so it's only a matter of time. Like, there's a lot of strength here. The other thing that spells a lot of strength is that look at this golden cross we've got. Golden cross on the S&P. That's pretty major. This is like one of the oldest indicators in the book, and there are still lots and lots of people who use this in their trading. So kind of the idea is that they buy the golden cross, and then they wait for the 50 to cross below the 100. So this would be the selling point, and then they wait for a golden cross, and they do the same thing. And a short would be at the death cross, and then they'd buy back in at the cross of the 50 and the 100. So they'd buy back in here. There was a fake signal because it crossed back over, but they would certainly be out by here. And then we've got a golden cross. So long-term, large funds, people that are looking at these things, they're going to be buying either Friday or Monday. Like, there's going to be, this is really, really delicious, prime, longing, long territory. So if the if this is bullish, what do you think that'll do to the rest of the markets as well? It could be that this is also a catalyst to helping out everything else, which also supports the theory that the Bitcoin bottom is in and we're off to the races. I know that a chart, Bitcoin can do whatever it wants, but the best sustained rallies are rallies where you come back and find proper support. Yeah, Chris Wall, I like that. Trade with the chart, not with your heart. If you can keep your emotions out of it and stay objective, you will be a much better trader. So the mistake that we made in 2018, we had this bear market and we were down here at the bottom. We were showing signs and nothing had really warmed up very intensely until this move. We had this giant move here and it kind of woke up everybody. And I think we're kind of doing that. But you see how there's very little retracement. It took us quite a while before we had any kind of a move back, and then we just kind of marched on. Well, when we do this without a break, sure we can get some nice movement, but we ended up erasing almost all of it back down to here because our structure was just a mess. I don't really want to make that same mistake, but it's just kind of inevitable. I don't know what to say. Bitcoin just seems to keep charging upwards, and there's a lot of hype and emotion in Bitcoin. So some level, you guys gotta buckle up and enjoy the ride. So anyway, this we paid for 9 months. It took us 9 months to kind of get out of this. This move was pretty exciting for about 6 months, and then we had 9 months of sort of downside before we started actually showing some life. And that is the chart. That's what a chart will look like if you don't get a pullback. And so we are, I'm looking for this, and the potential is here. But if we could just get back to our 200 or somewhere where we get some good solid footing, it'll make a huge difference in making this rally sustainable. Because when we start moving upwards, we want to really sustain that. The upwards, the top will be much higher if we can do it that way. But you don't always get what you ask for. But yeah, so I'm just watching this very carefully, especially this 4 hour, because we're seeing evidence of things moving around. Okay, so we just barely closed our 4 hour candle just a few seconds ago. And so this is our big test. If we can get up to this, the 20, we'll see how we interact with that. And we'll see if this is, if we're moving back upward or if we're going to reject and things will fall apart. So we'll kind of get to watch how that plays out. Have you back tested the Kelvin moving average indicator on short-term time frames like the 4 hour and 1 hour? No, I haven't. The reason is I'm just not a 4 hour or a 1 hour trader. Part of the reason is that it's sort of selfish. It's more convenient to trade on a daily and a weekly. Also, daily and weekly moves are much larger, so the profitability is higher. I try not to get too far into the weeds. This one I'm in the weeds because I've kind of got myself into a situation with my Bitcoin position. So I'm really being scientific and careful about how I trade this. But normally, my trading strategy is sort of a once a day type of thing that you don't even care about it or look at it until the new day shows up. And then you kind of look and see what changes need to be made. That way it doesn't take over your life. Because yeah, I do trade for a living, but I don't want to be so invested in a 4 hour move that I'm waking up at 1 in the morning and then 5 in the morning and different things to check and make sure, that things are still on track. So I think it's more profitable, it's less emotional, and the swings are better. So that was an awesome question. Blue Sky, coming up with the good questions. So yeah, here we are. So 22,800. We're definitely testing to see whether this 20 is going to be relevant or not. If not, we'll blow up to here and we just might continue. So in other words, buckle up. So I've been talking a lot about Bitcoin and especially these little bit shorter hour time frames. So I've been looking at the 4 hour chart on Bitcoin. Well, Ethereum is a little bit different story. So when Ethereum dropped below the 20, it did what Bitcoin did. It went down for a few candles. It came up, it found resistance, and then we had a big push breaking out of the 20. When we broke below the 20 this most recent time, we did find it as resistance. We had one candle to pop us up, but the next one brought us below. And we've been below ever since. And this was a much sharper decline. On the 4 hour, you don't usually get a flip from green to yellow. So this is quite a selling point on Ethereum. So flipping from green to yellow on Ethereum is usually about a week of downside. Like this is a pretty significant change. So this is kind of part of my thought. If Bitcoin and Ethereum move together and Ethereum has kind of fallen apart a little bit, that's kind of where I'm thinking. I wonder if Bitcoin will struggle as well. They will definitely kind of feed off of each other. Right now, Bitcoin dominance has been launching through the roof, though. So if I go to the daily chart and we look at Bitcoin dominance, you can see that we've entered a green zone. And our 50 is way down here. So this green zone is going to last a long time. Whether we continue to move up in the green zone or down is debatable, but the more Bitcoin launches, the more it outperforms the rest of the market. That includes Ethereum and everything else. So this is definitely something that I'm watching. When Bitcoin tops out, so say Bitcoin's just absolutely launching, it's taking over the world, everyone's invested in Bitcoin, we finally have a turnaround, suddenly you want to be in Ethereum, you want to be in smaller alts and all the way down to the bottom, and then you're looking for Bitcoin entry points. So yeah, so this is definitely something. Bitcoin has been taking over for the past about 10 days, and if it's sustainable, that's I'm not sure how sustainable it will be, but here's our golden cross, and now we're in a green zone. And so, we had a hesitant move right here at the 100-week moving average, and we're just way high, way above all of our other averages. So it's kind of taking the cake. The others dominance is kind of another thing that I keep watching. Exiting the red zone here means that the micro caps are going to start seeing some strength. So this is a pretty good entry point for micro caps. And to be honest, a lot of these micro caps have already moved a ton. Like Optimism is an example. Like, look at this thing. It just, like, if we're barely showing exiting the red zone on the broad view, I'm not sure entirely what's all involved in that, because a lot of these alts are looking like this. It's pretty wild. So Ethereum is one that I'm expecting a little bit more of a pullback, but also a much higher potential. I think between Bitcoin and Ethereum, I think Ethereum has a chance to outperform Bitcoin during this bull market season, and the reason is it's just more mobile. When it's up, it's higher. It's up a higher percentage usually than Bitcoin. When Bitcoin's dropping, it drops a higher percentage. So on the upside, when things are going well, it's going to be a very smart thing to be invested in. And if it's giving us better pullbacks and better entries, that's just to our advantage. So that's pretty cool. But we haven't even come close to the 20-day in a long time. So that's interesting. Another thing to look at with Ethereum is the Bitcoin to Ethereum chart. So you can kind of see how the Bitcoin dominance launched. And it was essentially at the start of Bitcoin outpacing Ethereum for the past about 10 days. So the trend is up because all of our major lines are generally trending upwards. But we've definitely been ranging. We've been ranging pretty good for quite a while. So this is since May of 2021. So for a year and a half, we've been fairly stable between 0.055 Bitcoin and like 0.83. So we've been in this range. And then that's another thing, if we're trading in this range, then if we get too far down, it's likely that Ethereum will start outpacing Bitcoin again. So we've been fluctuating in this range for quite a while. So we believe a trend until the trend changes. So here's probably support right at this 100-week, which is 0.066. So Ethereum might get outperformed for a few more days, but it just might be that that's the pivot point where Ethereum starts launching versus Bitcoin. But anyway, pretty interesting market. Today, Bitcoin is definitely we're still kind of rolling over, but in about 4 hours from now, we're just getting more data. Every day we get a new data point and we have more information and we can make more decisions. So but this is the season to be looking for entry points. It's not a place to be getting scared, or you don't want to take profits too early and that kind of thing. You want to be planning for the future, because if this truly is the bottom of the bear market here and we don't go lower than this, that means there's about 3 years of upside on the table, and we're going to be wanting to take advantage of every dip, every red candle to try to add a little bit more to our position and strengthen where we are. But yeah, there's a lot going into this. There's a lot of emotion. There's a lot of questions on timing and all of that type of thing. And so that's kind of what the Pro Channel is here for. And it's pretty cool that some of you guys have decided to join me on my little adventure, because I'm literally just placing trades in front of you guys and explaining why I'm doing it. And so it will probably give you a different perspective on your own trading, that kind of thing. All right, that's pretty much it. There aren't really any questions, and that's definitely the content that I was kind of looking to get out today. But yeah, it's very exciting. It's really fun. We're way low on our market. We're definitely at the beginning. So even DCAing at this level will pay off huge once we get rolling. But yeah, I'm a patient trader. I'm looking for the right entry points. I'm trying to make sure I'm doing what makes the most sense. And slowly, we're making some money. All right, you guys. I appreciate you being here. It's fun to do these Wednesdays and interact with you a little bit better. But yeah, so we'll hit it again tomorrow and see what the new day brings. All right, see you everybody. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.